we're here with our new portfolio. So you can see me on the screen, and Dylan is sharing his screen, and he's going to walk us through our new portfolio, or at least the beginnings of it. So what we've got on the screen in front of us is all our collection of trading systems. So at the moment, we've balanced. How many systems are there, Dylan?
This is 12 systems total.
Yes, this is the 12 systems we've got balanced at the moment. Basically, every sort of week we are able to put in new systems now that we've really got our development and our balancing system nailed down. So what we're going to do is basically go through that. So the first thing we do is find a new system, which is the finalists are all the ones we've got here. So we get a whole bucket of systems and put them together. And then when we put them all on a graph, they look like this. So I guess the first question, Dylan, is how come some start in 2005 and some start in 2012?
Yeah, that's a good question. 2012 start is just for the indexes because that's the earliest time we can get quality data for them, whereas the 2004 start is for foreign exchange currencies as well as gold and potentially other metals in the future because that's the earliest we can get quality data for them. Excellent.
And so why don't we just talk generally about what these systems look like individually? So what, I guess, the first thing that people will notice when they look at these charts is that none of these systems look particularly consistent or good. So what is it that we look for when we're selecting the systems?
Well, we're looking for, when it comes to selecting the systems for the portfolio, is to get a large bucket of good quality strategies, not necessarily looking for amazing or fantastic strategies. But when you get a bucket of good strategies that are low correlated, they'll go from looking like pretty decent strategies, but not quite straight lines, until you go switch to portfolio only, and then you can see quite a nice, neat general going up portfolio. So a bucket of good trades, good systems, is going to look like a fantastic portfolio.
Yeah, okay. So we're looking at this line here, which is looking very consistent. And if we go back to the individual ones, they sort of, like we can see, look like a hodgepodge of systems sort of going up and going down. And there's quite big periods where you can look at an individual one and it won't be performing well. But because they're low correlated, it stands to reason that when one's performing well, another one that's lowly correlated to it will have a lesser performance, and then vice versa. And so when we're adding all these on top of each other and they're all low correlated, then all their good and bad periods should even themselves out across all the different fluctuations that each systems see during their time. So I guess if you jump back again to the portfolio, we'll get to see that again.
Yeah.
And so you go.
Well, you can just see that coming into effect here, because if we go back to here, you can see there's some stagnating, there's some going up, and while some are stagnating, some going up, they're going down. But overall, that's just going to go into a nice, neat straight line up almost, but not quite, as we know.
Yeah, and I guess that drop there at the beginning of the stagnation period was the COVID dramatic market there, wasn't it?
Yeah, that was the COVID market.
And as well, we noticed that even though that line, when you look at it over the course of many, many years, looks very consistent and upward curving, we do have periods of less stellar performance. So we look at the beginning of 2019 and it's quite flat. And we see that during COVID, it wasn't all that great. So we can't expect all the time to have absolutely fantastic results. We're going to have, like we're seeing now, periods where results aren't as good as we otherwise would like them. Yeah, so there we go. We've got a period of there, January 19 to May 19, where not much has happened. And then at various different points, and even sort of the beginning of, late 2020, it was quite a bit of a sad market there. So we need to keep a perspective long term and make sure. So yeah, there we go. There's our modeling of our returns over August, which matches what we saw generally in our live performance.
That was the whole of 2020. The August and recent months will be about here.
Yeah. And then, so if we jump into what the actual correlation matrix looks like, we can see how they're either negatively correlated or their correlation is very low. So the highest correlation in that whole sort of matrix is, I think I see a 0.21, which is the highest there between the DAX and the gold for a reason.
There's a 0.25 here with two gold strategies,
Yeah, so that means that they're a quarter correlated, but we've reduced the risk that we're running on each of these strategies now. So each strategy is running a maximum drawdown of 3% historical drawdown in each strategy. And so therefore, we can afford to have the correlation at 0.25 or lower. So that is basically the rundown of our new portfolio and how we've managed to put it together. So in a quick summary, we'll go back to the start and we'll have a 30-second summary. So here we have a whole heap of robust systems that perform across all the range of markets. None of them by themselves are particularly spectacular, but because they're low correlated, when one goes up, that makes up for another period where others might be going down. And so when we combine all of those together into a portfolio where they all balance each other out, we see that we end up with a nice consistent curve over the course of time. And even though that curve, when we're looking at it in a macro sense, is looks very straight, we do see periods in that where we have a couple of months at a time where performance is negative or sideways. So we're very happy to say that this is going live immediately, or even is live now when you're watching this video. And because of the way now we've really streamlined our development systems, we are continuing to push through new systems almost on a weekly basis that we can then very quickly as well rebalance our portfolios and put them out. So while this system has, what did you say, 14 different systems?
This one's got 12.
12 new systems. We're adding new ones all the time. And so we aim to get upwards towards 20 systems and continuing to get them on more currency pairs and just more markets in general over the course of the coming month or two. So thank you very much for joining us for this video, and we look forward to giving you more updates very shortly. Bye.